What's poppin', YouTube? It's been a hot minute. Trying to get back at it. I've been trading. We've been going up and down in this market. We'll get after it here. I'm going to go over some charts. Here we have the S&P SPY, the king of them all over here. Still in this big, I haven't updated this. But basically, it really isn't even about the indexes. The SPY up and down. The Qs, I had this pattern drawn out on the Substack chat, where I think we're going to make some, maybe this is it, or get a little bit higher, trap some more longs, and then correct lower. And this is the NASDAQ Tech Heavy Index. So we'll see if we're going to get that or not. And ultimately, the mags have came back. I mean, they were just building here, which could go either way, and they popped up. But, they're at their volume profile here. This line, which is the most volume traded, I try to do 1 year. And yeah, it's basically there. This is a 12-month chart, which is a nice little, time, space metric to use to figure that out. So what happens here in this week is very crucial. We haven't really gone anywhere. We've gone up to gone down after just ripping for no reason off the AI fakeness. But you can see most of the charts have that same pattern. Some stronger than others. They're just all straight up. And then the newest darling ETF, DRAM, which is basically the main reason this all occurred. But really, this market's about these two indexes, SMH or ETFs, indexes, whatever, baskets, and DRAM. This is the memory ETF, which is basically just high beta cyclical stuff that's been mooning. I have some of the names here. MU, Skyhynix, whatever. Everybody knows. If you know, you know. If not, what are you doing? And then this one, NVIDIA, what have you, Taiwan, Semis, MU, AMD, INTC. And if you've been watching me or following me, I know I'm not consistent. I'm trying to get there. I trade off some simple, Fibonacci's moving averages. And, again, while I'm staying short, I did cover my shorts, luckily, in some of the accounts here. But while I'm still net short, I'll be quick to cover my shorts. But here's why. Until we make a new high, which we haven't, I have to stay short. And again, the moving averages can be your guide. So here's the NASDAQ again. And again, a quick little thing, what I use in my trading, for technicals. Here's the 200-day moving average, which I've talked about. This is probably going to be tagged in some other chats. And then here's the 50, and here's the fast 8 or 9, and here's like the 20, 21, whatever, just the main ones. So these are just like self-fulfilling prophecies here. So now that price is under all of them, all the three of them. It got above basically the 8, 9 on this week, but closed right at it. So who knows? We could keep going. So we're in kind of between. But the 50 price is now below 50, which is not a good sign if you're a bull. Essentially. And this pattern basically broke down here. So now all the resistance on this market is around this 700 area. So this is what I plan to stay short. Now, if we get up here with a candle and close above, then I'm going to have to reevaluate that, maybe reduce my size, maybe start to build long deltas in case I'm wrong, and then I can be, right if we rally to new highs. But I think we're going to get another leg lower. But I update my opinion, of course, as new information folds. And the other reason I think we're going to go lower, so again, you have the 50 below it, and it's also curling down now. Now it was going down, now it's trying to go even out, because this big move here, this is a pretty big move to go from this low to this high. In 3 sessions, which is a pretty epic move, a 6-7% move. But yet you have the VXN, which is the NASDAQ Volatility Index, which didn't really move much at all because of the whole dispersion trade, which is off core, which this needs to rally, but it's not. So single stock vol is all over the place, and index vol, the VIX, of course, is contained here, and then the VXN is contained, where single stock vol, which would be like Apple going up, and now wild And then look at Amazon. Down, 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 now wild. So this is called dispersion, and this is playing a role in the markets as well, with this index. So single stock vol is trying to correct here now, which is what we needed. And we need to see if VIX can now maintain its bids, but they both just sold off heavily this week. But again, the momentum here, we got some volume coming in. So is this institution selling out for a big drop? That's the theory I'm rolling with. We have momentum, high, making lower highs. So momentum topped way back here, and then price just ran up without it, as momentum has been declining since. Now momentum's trying to rally because the short covering rallies, the craziest rallies occur in bear markets with short covering occurring. But let me go back to this chart. So there's that momentum, and what I'm seeing here, you could also look at the momentum here. People like to look at the MACD, which again is also making lower highs. As price is trying to rally, that's a divergence. But here's the 200-day moving average. Now this big move got us back into this range. So the SPY is definitely stronger than the NASDAQ, but of course we should expect that because of the XLK here, which is tech, again, and the DRAM and the SMH, which took it on the chin. So these three make up basically these two. This one and this one are not going to go higher without tech stocks. It's just how it works because of the weightings, And then without tech stocks, it's about 4 or 5 stocks that basically are controlling the U.S. equity market, and 2 or 3 in Asia have been controlling those markets. So it's all about, again, DRAM and SMH. Those are the kings. So anyways, the 200-day moving average is here. That's why I have a target of 700. If that were to occur on the SPY, that would take us down to about a 7% drop, which would be fair still, and still maintain this uptrend, scare out the weak hands, and then I think we rally to new highs. And then 2027, it all comes down again, but we'll update our thesis and hopefully be streaming consistently by then. So basically, we have lower highs being made. If we make a new high, again, I'll change my bearish tune. We could have a quintuple top. I'm just kidding, but who knows? But again, we need to see what's going to happen again. And then here's oil, which is making higher lows on its up. Big dip here, but again, it found support right here at this low area, and the prior low is here. So, and then it made a new higher low here, and is basing above the fast moving averages here, which is a bullish signal. And this is oil, which is a key thing in this market right now, is also curling up here, coiling, whatever, trying to find a base, a shelf, whatever you want to call it, at all these moving averages. So here's the 50. Again, it's back above it. The 50 looks like it could curl up here and go, which would be a bearish sign. It's above the fast moving averages. We got the green paint, which again, if you follow me, you know what that means. I had a squiggle here for oil to break out. It did not. It came back into range. But again, as I said in the other video, or in the other, on the market on the SPY, the 200-day is right here, acting as support. The fast line is above the slow line on the momentum, what have you, the MACD. So there's bullish things setting up. But of course, any geopolitical, event, nonsense, tweet, whatever, could wreck oil, quickly. So oil is like a widowmaker, what have you. So be careful with that. And then I'm gonna shut this down here. And then one of the other last markets, and I'm still messing with this stream software, I wanted to cover is the gold. So gold here has been basing, so it could be, basing here or whatever, consolidating to have another leg lower. We can look at the weekly, which that could be the case. This is really up to the dollar and rates. We could also cover rates, but we'll do that on another video because there's a lot of shit finally happening now. Let me delete this because gold broke that. So gold here is consolidating right at this support area where it's, held. Let's just call it the 360 zone. Under 360, it's lights out, back down to probably 300. But if gold can basically get up here, find support, boom, 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 that would be, let me clean that up a bit. Some ideal pattern where we would like to see gold get up here, get it close, make a new higher low, put in a higher low, I should say, and then bam, that would be our signal. And by that time, the paint will turn green, something like this. The cross, paint turns green, the buy signal prints, and you're off to the races. So yeah, cheers. Thanks for watching. And I did want to cover one thing. I'm in this Discord here. If anybody wants in, I can let you guys in. It's essentially have your news feeds plugged right in so you know what's popping if you're an active trader. The calendar, depending on how active you are, if you trade Forex, a trader's chat, a free chat, and then there's some other stuff that's more for paid right now. But different stock ideas where I'm going to be looking to be active more throughout the day. So if anyone's game on that, holla. But yeah, I'll put a link in there in a comment below or what have you. Alrighty, fellas and gents and ladies, cheers to the weekend. Thanks for watching.